Alright guys, about to begin, Alright guys, getting set up on Rumble. Give me 1 minute guys. We'll have everything ready to go. Today I'm going to be talking about banks. And give me a second. Bring up YouTube. Alright, where's banks? Alright, let's get this. Alright guys, let's begin. Rumble, you're going to be live right now. And over here. Alright guys, almost set up. Thank you guys for your patience. If you're here early for the daily live stream, I know I'm kind of late, but I got kind of busy. But today's talk, I'll be going into the banks and basically information about it to help educate people about it. Let me see. We bring up. Where you at? All right, guys. We're good on YouTube. How's my audio, guys? Sound pretty good? Let me check. Give me a second to check my phone. Commercial. Alright, doing the sound check, guys. You guys got me loud and clear? Alright, I got me on YouTube. And now we're going Rumble. All right. Can't hear myself on Rumble. Hello, hello. Nothing. I got myself. Rumble, no audio. Okay, what about now? You guys got me on Rumble? Alright. I think audio works on Rumble now. I can see the levels bumping. Alright guys, let's begin. So welcome to the daily live stream where I'm going to be going over basically economy, investing, but today specifically I'll be going over banks and investing and just understanding what is the difference between like a central bank or what is a regular bank and some details about it. So we'll start off strong, guys. Oh, let me turn my alarm off. Alarms off. Sorry about that. So first off, guys, what is a bank? What is it? What do they usually do? Now, I can explain it, but one of the best things I like to do is go to Investopedia.com, and Investopedia has a really good library of investment information. So if you want to increase your skill, increase knowledge about it, just watch this about banks. So let's watch this video together. Desktop audio on. Make it big.
A bank is a financial institution licensed to receive deposits. This type of bank is referred to as a commercial or retail bank.
Look at that. Let it build up a little
Some
bit more.
banks also engage in the issuance of new securities to the public.
Ooh.
This type of bank is usually referred to as an investment bank. Due to deregulation, a single bank is allowed to do both. A bank that operates as a commercial bank accepts customer deposits in the form of demand deposit accounts, savings accounts, money market accounts, and timed accounts such as certificates of deposits, CDs. Banks pay interest to depositors on some of these accounts. Banks loan the deposited money to borrowers who pay interest to the bank as long as the loan is outstanding. Typical loans include short-term loans, car loans, mortgages, large loans to businesses to fund capital purchases, and lines of credit. Some commercial banks also issue credit cards as part of their services. Just like any other business, a bank's goal is to earn a profit for its owners. It does this by earning more on the interest it charges its borrowers than it loses on the interest it pays to depositors. If in a year a bank has $100 million in deposits for which it pays 2% to the depositors and then loans that $100 million to the borrowers at a rate of 5%, the bank earns a profit of 3%, $3 million for the year.
So that's the basic thing about banks, guys. They give out loans. They have some cash flow for people who want to put money in there, CDs, savings accounts, some of their checking account. But there's other things like, how big are banks? What is like a central bank? And if you go in there, you can just go bank versus credit unions. You guys can check all that out. What I want to get into first off is basically the biggest bank out there is the Federal Reserve. Now, Federal Reserve is a private bank, and as a private bank, they are massive. Like when we start measuring, right over here. Nope. There you go. We start looking at like some of the biggest banks out there, guys. We have the Federal Reserve at $8.8 trillion worth of assets. The central bank of the United States. Remember, it's a private bank, not part of the government. We got Japan sitting at $5.8 trillion. People's Bank of China, 5.14. Deutsche Bank, 2.6. Bank of France, 2.3 trillion. Bank of Italy, 1.5 trillion, and Bank of England. So this is all. I think we can look at some of the assets here, but here's like the list of all the central banks out there. And central banks, they do some kind of good, like manage the money in a sense, but how we have our banking system today is basically fraudulent, and they just print to infinity. But that's not the discussion so much. But when it comes to going, they have 8.8 trillion, and there's some really interesting information about it. The owners of the bank, these guys get a 6% dividend on all their investments. And if you break it down, and this is off the Fed's website, federalreserve.gov, and you see the stockholder with total case of assets more than 10 billion or smaller. If you keep going through, in that case, stockholder gets a solid rate of 10 billion or less, or 6%. So you go through, you can start reading about how these individuals make income and the owners of the bank. I think there's like 13 individuals who own the bank. But let's see what kind of assets. I'm going to go through assets they have, but here's some other big banks. You guys want to know some of the largest U.S. banks. We got J.P. Morgan Chase at 3.31 trillion. Bank of America, 2.14 trillion. Citigroup, Wells Fargo, Bancorp, PNC Financial Services, Goldman Sachs, Capital One. So here's some of the biggest banks. So you can see that a lot of these have a they have a lot of money. And if we're going to look at some other details about some of the biggest banks out there, we'll check some other links over here. And this is just like, actually, it's a little later on in the talk. Talking about some of the biggest bank failures out there. So I guess we look at banks. We can look at some stocks right here. Type of act. We talk about financial. Let's see, financial. Just for like, what's it got? Consumer energy finance. Boom. Banking services. All right. And here's another good way to see about banks. You got JP Morgan, all these different top financial institutions, if you guys want to look at some really cool things about banks, we can look at their dividends and PE ratios. So let's look at that. Dividends, at their dividend yield. Already at PE ratio up. That's that PE ratio right here. So if you're thinking about investing into banks, let's check out volume, market cap. We don't need it. We're seeing PE ratio and dividend yield. Like if looking at investing to some banks and buying some of their shares, let's see what the highest paying yield out there is. So we got this bank called Mechanics Bank. So on the OTC markets, it is at a 19.49% yield. Woo. I mean, a lot of these are pretty crazy high. Let's see. I mean, 19% is really high. You got some of the other bigger banks like, oh wow, Red River banks. They got some really low yield. So there's a way you can invest into banks and getting some yield on it. You know. Let me see what else we got. Banks. So if you guys want to look at that, you guys can, you know, just go to investing.com and check this out if you want to look at some banks. A second. Stock screener. Ooh. And I think that financial banks are going to do pretty good in the markets because the Federal Reserve is going to prop up basically the markets as much as they can. So maybe for this year we might see a bump in the in financial stocks or bank stocks, but I don't know how long it will last. Maybe just the end of this year or a little bit longer, but we shall definitely see. Check off this market cap, change, hit apply. See some of these PE ratios. So the lowest P ratio is Bank Financial, ticker BFIN. It's at 12.83. Give it a 3.8% dividend on their stock. All right, we'll check out some of these bigger banks. Let's see. Bank Core, JP Morgan, pretty low PE ratio, 11. Let's check out their financials a little bit. They got 2.8% dividend. So a lot less than inflation, but not too bad. Oh, my fan, I gotta clean that. Alright, let's see. Go to some of this, go into the charts. Ooh, we got a super high PE ratio of 114. Eagle Financial. That's crazy high. Ooh, really, really high. Give me a second. All right. But this is a good way to look at some banks, guys. You guys want to look at all the banks. Just want to cover some. JP Morgan is one of them right here. You got their dividends. I think it's looks like it's quarterly. And you can see that this bank stock, woo. I mean, we're talking about like $5 all up to 139. Look how the volatility in this. Look how spiky it is. Holy crap. It's crazy. Like we're talking about like some massive movements here. So if you can actually almost you can like actually trade this stuff, how big the movements are. Or if you're an options trader, option trading would be really good thing for JP Morgan. Let's see, we should go to general again. See some of the other key numbers. All right, we got the next reporting day is April 14th, 2023. So let's click on that right there. The dividend is $4 a year at 2.8%. So pretty good. $4 a year. I mean, if you've been holding on to the stock for a long time, that stuff would definitely catch up. And some in here is their revenue, the earnings per share, and their forecast. So if you're going to be trading off their dates, you guys can get a lot of this information up front. Okay, let's see. Other bank stocks. So here's some things I would avoid. Is 114 PE ratio. That's crazy high. Let's go to page 10. What has the lowest PE ratio? Let's see. Ooh, we got some negatives. Ooh. Allied ADR, Popular Bank, you get X Financial. I mean, these are some really low PE ratios banks with some pretty high yields. This is Atlanticus Holdings. Let's try them out. So we got them. And we also got KB Financial. That's a Korean one. Not too bad. Signature, ooh, 2.2% of Signature. We got 4.6. Check them out. Next earning date, we gotta check that out. Low P ratio, pretty high dividend, 9.6. Let's check out their charts. See how it looks. Ooh. Look at that. Big movement up. Maybe not buy it, but it'd be a pretty interesting roller coaster to get on. But we'll see how it does in a few months. If I can, remember even to look at this bank. But just look at some bank stocks, guys. Outside of that, let's get back to the Fed. Get into the most interesting stuff. Now, if you guys don't know where the Fed's at and how it looks, this is the Fed. It's located in DC. Now, if you haven't been to DC, check it out, guys. I think you guys can get tours. I've only walked past it. I've went through this already. Went through this. And also to get back on that 6% dividend. Now, if you don't know what a dividend is, guys, here, let's watch this video. I know some of the people who watch this video might be new to finance or new to investing, so let's check it out. Skip this ad. Give me a second.
Dividends may seem like money for nothing, but they have several implications. When a dividend is paid, a stock price falls by the amount that goes to shareholders because it reduces the company's market capitalization. The change is hard to notice amid the up and down movements of a normal trading day, unless that dividend is especially large. Dividend payments also reduce a company's retained earnings. If the dividend was 25 cents per share and there are 100 million shares outstanding, retained earnings fall by 25 million. With a stock dividend, the amount removed from the retained earnings is added to the equity account, and brand new shares are issued to shareholders. Each share's par value remains unchanged. Cash dividends are taxed at the normal tax rate or a reduced rate of 5 or 15%. To qualify for a reduced rate, the investors must own the stock for 60 consecutive days with the 121-day window centered on the ex-dividend date. Some companies declare part of a large dividend to be a return of capital that lowers the basis of the stock and makes for a larger capital gain down the road.
Definitely. I mean, there's definitely strategies in dividend investing. I've covered in multiple videos, but just to go back, that these companies, like the Federal Reserve, that 6% dividend on such a large amount is massive. And it's kind of like not a really lose-lose. So that's what's going to tie me into this part of the talk about banks, guys. Is not this one right here. Some of the lock. Ooh, where's that? Give me a second. So I talked about a whole bunch of these banks making income, some of their financial, but here's some of the biggest losses in banks. Washington Mutual in Seattle, assets at the time failure, $307 billion. We got a $40 billion in Illinois National Trust Bank. First Republic Bank Corporation, $32.5 billion, 1998. Wow, look at that. Bank of England, Massachusetts, $21.7 billion. There's a lot of banks who lose, and it sucks being on that. Oh, Community Bank of Colorado, 1.4. United States Bank, National Bank, California, 1.3 billion. And we do have insurance on banks on your money, so maybe just the bank loses or they get bailed out. But banks they don't always. I think the last bank that failed, based on this list here, let's see, was 2015, Doral Bank. Superior Bank, Integrate Bank. So it's been quite some time since the big bank failed. I think the earliest, let's see, 1984. Ooh. So I would say getting into the bank that they're not going to fail so much, but you know, they pretty much pop up by the Federal Reserve or the Federal Reserve of their country. And you can tell by like I mean, if we go through their balance sheet, I think it'd be a little bit too much for this video, but just a basic thing about banks. So check out their PE ratios, looking at investing. Just check out their stuff right here, guys. And what else? How the Federal Reserve is not it's a private entity. They get 6%. That's massive, especially what's been happening. My last live show, I went about debt. So my next one, I'll probably go back on investing into some stocks and stuff or forex. But I want to keep this one short, kind of busy today. But yeah, if any questions or comments, guys, let me know. Send a comment and I'll get back to it, and or hit me up on my Telegram. But that's the video, guys. I'll see you guys on the next live stream next week, and I'll post a few more videos about some finance stuff or MQL4. But I'll see you guys. Thank you. Let me see. Where's YouTube? Give me a second, guys. Where's OBS?